welcome back. We are halfway through day 2. We have 2 presenters at this next session, which is sponsored by BDO Insights. First presenter, Catherine Bell. She's a sustainability professional with decades of professional services experience in economics, research, and finance. She was previously responsible for launching BDO's global sustainability program that supported the development and management of infrastructure put in place for BDO's global sustainability practice. She supports BDO clients activate and improve on their sustainability program and strategy, advises on ESG technology and tools, industry best practices, and learning and development. In addition, she supports BDO's global sustainability leadership on several sustainability initiatives and programs. She will be joined after her presentation by Adam Myers, who's a partner in the corporate finance area of BDO. He has over 19 years experience in audit and corporate finance. He joined BDO in 1998, was appointed to the partnership in 2011. He specializes in valuations, expert reports and financial modeling for a wide range of industries, and has extensive experience in IPOs, having advised on a number of transactions involving local and international parties conducting business in Australia. Welcome along to whom are you starting, Adam? Okay, Adam is up first.
Thanks, Jerry. I'll try to keep this brief and get to the main part of the show. It's great to be here again at RIU, and many thanks to the Vertical Events team for putting on such a great conference. Today, we want to touch on what we see in the market. I'm sure you're all aware of the record number of IPOs that have been reported in the press and know that the numbers have been records. What we'd really like to share with you is things that don't hit the press, the things that actually come across our desks. What we'll briefly touch on today is what's happening with exploration activity, M&A, a look at some of our views on commodities, and then onto ESG, which no doubt you've gathered from Catherine's introduction she'll speak about. As you may have seen from past RIUs, we undertake an analysis of the quarterly cash flow statements lodged by explorers, and we've got a bit of that data ahead of the release of our report of the December quarter. And firstly, onto the number of companies lodging 5Bs. We hit 740 companies, with much of that increase actually occurring in the back half of the year. And I can certainly say that we've never seen a 6 months like it. It was certainly the busiest our office has ever been, and it was really around that IPO activity. What we've historically seen, though, is that the December quarter is treated quite cautiously for capital raisings. If you miss that pre-Christmas window, then it does take quite some time for capital markets to come back. Many years we've seen around December, there's a plateau or a dropping off of exploration expenditure in that December quarter. And what we can see is that this certainly was not the case this year. We've had 4 consecutive quarters of growth in exploration expenditure, and the 973 million spent in the December quarter was the most we've seen since we began our analysis in June 2013. So what's this data telling us? Well, quite simply, the market's very optimistic. Companies have the confidence to deploy their cash, and the investors are backing the IPOs. So certainly on the investor side and the company side, there is a great deal of optimism. And we've seen that not only in IPOs, but also secondary capital raisings. We've also seen a trend with a number of spin-offs, and there's many companies that are focusing on their primary projects. They're well cashed up and advancing those. And then they've undertaken a listing of their secondary project to provide dedicated funding to that project, enabling investors to choose which commodity they maintain their exposure to. And that's often created quite a lot of value for the company and for new investors. So what's our view for 2022? Well, I can assure you that we have plenty of IPOs in progress at the moment. I've got one that we're trying to lodge this week. It possibly was going to be today, but it looks like tomorrow now. So, there's a lot that we're getting inquiries for. So the companies and the brokers certainly have the confidence for at least the next 6 months that the market's not going away. Predominantly exploration related, but we do have a range of other sectors we're seeing too. So capital market conditions are quite good. I can also tell you that many explorers are cashed up, and we expect high levels of exploration activity continue, perhaps only impacted by personnel and equipment issues. So certainly, a relaxing of the borders would be welcome news to many in the room. What we've also seen is via a publication that BDO does globally called Horizons. It's a global M&A publication. And what I think is really interesting in that is the non-mining M&A, and the heat chart we're seeing in that is showing that in materials and industrials, there's a lot of activity there. So there's some global demand that's been fueled by the move to greener technologies and also from economic stimulus that's driving demand that will lead to flow-on demand for commodities. So that is really underpinning, again, another data point to underpin our view that this 2022 year should be quite optimistic. Touching on mining M&A, and I'm sure that Canaccord mentioned this in their presentation at the start of the week, we expect to see an uptick in M&A going forward. What we have seen is the level of experts reports we work on had really dropped off. We'd really switched over to IPO work. And a lot of those experts reports are around, providing an opinion for funding transactions that are driven by necessity. What we've seen with the M&A activity that has occurred is it's through a properly conducted marketing process. It's not a desperation transaction. And according to market data from Global Data, they reported that there was an 84% increase year on year from mining M&A. So quite a healthy increase. Again, that reaffirms the confidence we're seeing in the market, but we do caution there may be some short-term shocks. And really that's going to be driven by geopolitical issues and other unforeseen factors. If we look at what we're seeing in mining services, our M&A team in that space is very busy. There's a lot of expressions of interest there. So we think, again, another reaffirming data point, and we expect that to be a fairly hot space. And really there's a lot of demand there trying to find people to deploy on projects. If we then turn to, I guess, our views on commodities, what we've been talking about over the last few RIUs is really a push to green technology, sustainability. And what we've really seen emerge over the last few periods is that the gold interest has dropped off a little bit. Oil and gas has made a real exodus. And we've then seen gold come back for some fundraising, but a lot of lithium, cobalt, other battery-related minerals, copper, nickel. So, there's a few examples on the screen there where that's the theme that's coming through, where the money is actually deploying to. So we really think, a key takeaway on the commodity front is that there is a sustained push into decarbonisation. It's not going to go away. There will be long-term support for these minerals. So whilst there might be some short-term shocks, we think there's a very strong case for each of those commodities. And really what you can look for in the short term is where you do get supply-demand imbalance in those particular commodities. There was a lot of talk from commentators about gold potentially coming off with the Fed potentially increasing interest rates. However, I think that has been overblown a little bit, and we are seeing that there is still some appetite for gold, and particularly with the geopolitical risk that we continue to see. But realistically, the main wave that we've seen is around ESG. And to give you more insight on that, I'll hand you over to Catherine Bell, who can run through what companies need to be taken into account, and it will give you an idea as to why we invested in our business too.
Thanks a lot, Adam. So right now, for most companies, there is a growing business imperative to address sustainability. You know it, you feel it, it's everywhere. All companies' material risks are broadening and becoming more complex with the realities of climate change, global health pandemics, social inequality, and rising industrialisation. These mounting risks are seeing global movement emerge driven by capital markets, governments, community, and various stakeholders calling for transparency and accountability across ESG to better understand the impact of business and industry on the environment and our societies. The vernacular, terminology, and even the meaning of sustainability has changed over time. For business, we've seen it evolve from corporate social responsibility, which generally refers to the practice and policies of a company that a company adopts to promote positive impact, to ESG, environmental, social, governance, which is a metric-based reporting process that promotes the ongoing process of assessing, monitoring, and improvement. Right now, this ESG metric basis is being supported by reporting frameworks. Right now, there's probably 3,000 out in the market, which is rather daunting and making it very difficult for the capital markets to understand where companies and how to compare apples to apples. The good news on that front is that they are converging, and we're hoping to see in the next few years a standard ESG global standard, which will be supported by the IFRS Foundation and the International Sustainability Standards Board. So there should be more clarity around how companies can measure, monitor, and improve with regards to their ESG. So some top ESG considerations for exploration companies. Reporting and disclosure is really all about accountability and transparency. It's the tool that's being used to help capital find its way to businesses who operate responsibly and to address global issues such as the energy transition. The one that's probably most concerning for everyone in this room will be access to capital. ESG screening mechanisms are being placed on every financial institution and institution everywhere. So as part of being processed for access to that capital, you will have to be able to demonstrate your understanding, respond to your material risks on an if not, why not basis. Social license to operate, you're all extremely aware of this. It's been around for a long time in the mining industry. I think what we're looking at here is a version 2.0. Essentially, it's just an enhanced version of where this, rather than qualitative, they're looking for quantitative and qualitative responses to across these ESG risks. And part of what this, I guess, evolution of social license to operate is really understanding that you can't look at E, S, and G in silos anymore. They're all interdependent, interrelated, and interconnected. The third point to make is you're being rated. Global ratings agencies are scraping your data from websites across and rating you. So the more information and the more structured kind of active management around your ESG that you're investing in, the more the positive score you'll have. So the ratings is a murky area at the moment because they do have different methodologies in the way that they measure and rate you. But as far as from a proactive point of view, this is something you can play a role in to help improve your ratings and where you're seen in terms of your maturity across ESG. The fourth point here is really around something that we're seeing that's coming across our desk. We have a remuneration and reward team, and increasingly so they're being approached around linking board remuneration to ESG goals. The reason for this is again, it's providing confidence to the market that ESG is being taken seriously within the business and that it is being integrated into the business and that there are KPIs applied to seeing that this is actually getting driven throughout the business continuously. We're here really to help companies like yours either start your journey or improve on your journey. Many are in Australia. We're a bit of a laggard here, are only at the beginning of their journey and trying to understand what you need to do. It can be confusing to start with, but this is sort of a simplistic diagram in terms of how we really get companies activated and understand what their ESG baseline is, to then go on to improve and And I guess the key point here is that ESG, just like your financial reports, it's data. And so the more data that you can collect and understand around your non-financial business, the better. It provides more levers in which you can control and create corporate value. And also it just helps with understanding new opportunities. As Adam did mention, we are undergoing a massive transformation of our energy systems, our global markets, and companies are looking at new business models, collaborations to ensure that there is, I guess, resilience in your business to survive, particularly what's going to happen in the next 10 years as we decarbonise the globe. Pushing hard enough. So in conclusion, I have some top tips. ESG is going to remain a dynamic area for the foreseeable future. So it is not going away. So it's better to embrace it now rather than ignore it. It's best to remain agile in that sense. Aim for having a clear and concise ESG strategy. Start to view your ESG and business strategy as one of the same. Having systems and governance that embed ESG into your business will ensure you're not leaving anything on the table. Many of you are probably doing some really great things, and there is value in communicating those activities as part of your broader purpose and strategy. ESG is data, as I mentioned. Ensure you're capturing it, monitoring it, and improving on it. Actively manage your own narrative. Don't be managed. Be focused on the opportunity rather than a tick box approach. Look for partners, collaborations, even your competitors. Where can you have a positive impact? Think outside the box. ESG and sustainability is here to stay, and in time, once firmly integrated, it will be business as usual. So the sooner you start, the better. Thank you.
So the messages get cracking. Cygnus Gold is a gold and base metals exploration company currently targeting the southwest terrain and the Wheatbelt region of Western Australia, in addition to other exciting opportunities. Executive Chairman Ray Shorrocks will present an update on the exciting plans for Cygnus Gold in the future. Earlier, he sent us this presentation.
Good afternoon, and thank you for the invitation to the RIU conference today. Hopefully we can keep you interested throughout the next 15 minutes. I think it's a very exciting story indeed. What have we got here? Well, I have a team that we've amassed over the last little while with quality assets, and we do have very big ambitions. But by way of an overview, the company has recently transitioned to new management, to a new management team with an outstanding track record of discovery. I joined as executive chairman just recently. I've also appointed Duncan Grieve as exploration manager. I'm supported very ably by a very strong board, and watch this space over the course of the next few weeks with respect to additions to that. Nothing to announce at the moment, but very exciting times ahead for us, both in our projects and our team. We own a diverse and very extensive portfolio of assets in what I describe as criminally underexplored southwest terrain in the Yilgarn, with a world-class deposit such as Julimar and Boddington, which you all agree are stellar projects globally. The asset portfolio is hedged against commodity cycles, which we're very cognizant of, being prospective for a range of commodities, including nickel, copper, gold, silver, zinc, and all your PGEs. And in addition to this, and I'd like you to keep this in the back of your mind, with a track record of the team that we've got here and the management in brownfield exploration, we are continuously looking for other assets to complement our existing portfolio, both in Australia and potentially overseas. So watch this space. Capital structure, very straightforward. Code CY5, remember that. enterprise value sub 20 million, with the assets I'm about to describe to you, very, very, very underwhelming valuation. We're ably supported by a great group. Top 20 here own almost 60% of the stock, and we are, and I'm very glad to say, supported by some institutions very early on in our life. So I'm very happy that we're being supported, and that's primarily driven by a board that has done quite a bit in its day. So myself, founding chairman of Bellevue Gold, I'm sure you're all aware of that. I'm also chairman of Orteco Minerals. Well, I'm supported by Michael Bohm, who's a substantial shareholder in CY5 and a non-executive director. And he's a non-exec director of Ramelius Resources and Mincor Resources. Mike Naylor, of course, is a substantial shareholder, supported by Sue Field as joint company secretaries. A great, safe pair of hands and very knowledgeable in the resources sector. And then, as I described earlier, Duncan Grieve, who has a great track record of discovery, and I'm so pleased to have him on our team. He has already brought some real focus to some of the things that we're looking at. And of course, he worked with me at Bellevue Gold. So why do I go on about this team? And I should also add that that was just the team, if you like. I'm ably supported on our board by Simon Jackson as well, and Sean Hardcastle. But this management team and this group that I've just described have drilled over 1 million metres of drilling in its lifetime, and that's primarily in 3 very successful companies that we've created. We've delivered over 8 million ounces of gold, base metals, and in particular at Bellevue Gold, where we have a global resource of 3 million ounces. We've done 350,000 metres of drilling in 4 years at delivery costs of $18 per ounce. I'm pleased to announce that, as it was described yesterday morning on Tuesday, that Orteco Minerals has increased its global resource from 1.7 million ounces to over 2.2 million ounces. And it has drilled 85,000 plus metres in 2 years at an average cost of $15 per ounce. And then finally, at Burkina Faso, at Griffin Minerals, Steve and the team had a global resource of 3.6 million ounces at over 800,000 metres of drilling in 10 years at a discovery cost of $20 per ounce. So we've got a great track record amongst a team that know each other and know what we need to do going forward. So the projects, let's have a look at these projects. We are currently focused in Australia. Cygnus Gold in Globo have around 2,000 square kilometres of tenure located in that southwest terrain of that prolific Yilgarn Craton, which we are lucky enough to have on our doorstep in Perth. Within this world-class mineral-rich province, there are vast portions that have seen very little exploration, as I mentioned to you before. And this is particularly true of the southwest terrain, which remains hugely underexplored. This gives us a lot of potential. Underexplored is a buzzword, and you've heard it all before, I am sure, in the world exploration stage, and gets brandished around way too much. But this really is the case for the southwest when compared to the rest of the Yilgarn. This is particularly amazing, I would have felt, when you consider that this area hosts giant ore bodies such as Bonington, and by Newcrest, of course, and Julimar, owned, discovered recently by Chalice, which is a world-class project. And Cygnus holds an enviable land position in this province, as in a prime position to uncover value within the region with a host of targets, right? That's incredibly important to remember. Various commodities, including nickel, copper, gold, silver, zinc, and PGEs. So let's have a look at some of these projects. These are our core assets at the moment. Body Rock, high-grade silver, lead and zinc. We recently announced high-grade silver, lead, zinc results from the Bonnie Rock project. These results included rock chip grading up to 89 grams per tonne silver, 3% lead and almost 7% zinc. And these results are supported by high-grade results in some of the historical drilling, which graded up to 760 grams per tonne silver. These rock chips not only confirm the tenor of the high-grade zinc and silver mineralisation, but also highlight the potential scale of this target, which remains completely open in all directions. Historical drilling and the focus of previous exploration in the 70s, nearly 50 years ago, of course, only focused on the small portion of the anomaly, with many of the holes that were drilled ineffectively testing the target. Really important to remember. The team that we have
to bring you an interruption to this program. We're working to fix it. Okay, keep talking was the word. Just a reminder to you to visit the stand of, oh, that's not it. See, I wasn't prepared either. Well, Stantec, okay. Stantec, don't forget to visit the Stantec stand. They're giving away 3 sets of Apple AirPods. So visit them on stand 24 for your chance to win a set of Apple AirPods. Stand 24 for your chance to win. Are we up and running? Oh yeah, here we go. Oh no, move on. English would be useful here, but okay, what we're doing is we are moving on to the next presentation. In 4 short years since inception, Black Cat Syndicate has built a resource of around 1.3 million ounce at the Cal East Gold Project. Black Cat is advancing towards construction of a centralized processing facility and is aiming to begin mining operations thereafter. To tell you more, Managing Director Gareth Solly joins us now. Gareth.
Please don't cut me off like that, Jerry. Thanks, Jerry, and thanks, RIU. Pleasure to be here once again and presenting an update on Black Cat's activities. We have just turned 4. We IPO'd January 2018, so 4 years and a couple of weeks at this point. And we have a great project on the outskirts of Kalgoorlie, amassed in that time. Started with about 80 square kilometres, now 800. Started with 0 resource, now 1.3 million ounces and still growing. We're getting ready for that production, as Jerry indicated. We've got the Maury open pit, Majestic underground, other open pits that we're working on. We have a low-cost strategy, development strategy to get into production. So we're going to centralise a mill, build our own. We're securing the equipment and we've got almost all of our approvals in place. And that's one of our mills that's now in Kalgoorlie and refurbished. 140 million shares on the market, market cap around 85 million, 5.7 million cash. Top 20 have 50% of the company and the directors hold about 15%. They've contributed 5.5 million of their own cash over the 4 years. Those directors include Paul Chapman, Les Davis, founding directors and shareholders of Silver Lake Resources and very successful mining entrepreneurs. We've got Tony Polglaze. Tony has successfully built numerous mills around the world, took Avanco from explorer to producer and successful M&A. And we've got Philip Crutchfield over on the east coast of Australia, prominent barrister, very successful businessman, founding chairman of Zipco. So they complement my experience being a mining geologist, and I certainly have had experience in Kalgoorlie and ran Daisy Milano gold mine for Silver Lake in the early days. So there's Kalgoorlie and there's our tenements in yellow. So we're to the east of Cal, hence Cal East project. Great part of the world to be doing exploration, great part of the world to be getting into development. Obviously there's a strong service providers in town, a workforce there. We're well connected, good infrastructure, and it's easy to do business. So we're a significant holder in the area, and certainly we think there's a lot more exploration to be done on these leases. Like you hear a lot, underexplored, and the eastern side of Kalgoorlie certainly is. So that graph shows how our resources have grown over the 4 years since we listed. So we made a discovery early on. We released a small resource to get runs on the board, and we've just consistently continued to churn out resource updates and grow these things, and that's still happening. We're currently working on more updates, and in time, I'm sure this will keep growing and growing and growing. So from these numbers here, 1.3 million ounces, about 530 has come from transactions acquired, and about 740 from growth with the drill bit. Low cost per ounce, similar to, you hear a bit, $15 per ounce, so below the market average. Most of the resource is contained with 4 main project areas, which I'll talk to in a minute. So our plan is to obviously get it into production. If you've got a small resource, you might toll treat it. If you've got a large resource over multiple years that you can mine, you certainly wouldn't toll treat it unless you've got a really favourable rate. So we're building our own mill. We've got a great spot at Majestic, nice and central to our resource base, good water there, nice access back up into town. And it's all conventional free milling gold, so no issues in that. It's a very simple plan, fed from open pit and underground. We have tried to do a lot of things in the background to keep costs low. That includes, about this time last year, we picked up 2 ball mills and a whole heap of structure and ancillary kit from here in WA. We picked that up because it was going to save us lead time for getting it here. It was also going to save us cost. We've done a lot of other work in the background. The designs have been ongoing for the last year or so. We're going to have our own crushing circuit supply financed. We've got a heap of steelwork and plate steel that will go into reducing the cost of getting this into construction. It's a simple plant, all simple CIL, gravity, 6 adz tanks and a couple of leach tanks. We can plonk a second mill in here, which we own, put in 2 more tanks, and we can take this thing up to 1.5 million tonne per annum, should we continue to have the success that we've shown that we can have. So we're working on that. In terms of approvals, we're well advanced here. So granted mining leases for our resources that are in the current mine plan. We've got open pit approval for RIU, underground approval for Majestic. We can build the process plant with DMIRS and the DWER approvals. And we're just waiting for the tailings storage facility, which we expect this quarter. We're still building the team. Obviously labour is important, but we've got a good team really right now that can take this through to production. Some of I'll go over the 4 key areas that we'll be mining initially. This is Myri. So Myri we discovered in 2018, and we've consistently grown the resource here. We'll mine Myri as the first open pit. It's high grade near surface. It's fully approved. We've done half the grade control here. The satellite pits in the area, and that will be trucked down to the mill and processed. Underground, there's a scoping study on that. We long term will drill that from an underground position, most likely to save costs from surface drilling, and certainly there's a long term mining proposition here. Majestic, we spent a bit of time last year. Last year wasn't the easiest to get rigs. We had a rig and it was fairly slow going with the labour supply last year, and assays were also slow. But we have in sort of 18 months, 2 years, grown this from about 260,000 ounces to 500. The underground was our focus, and that's grown as well. You can see from the design beneath the pits there that we do have a plan to take this through to production. We're working on these reserves at the moment and they'll be released later this quarter. Still at Majestic plan view now. You can see the Majestic open pit here, and we're planning to build the mill adjacent to that to the west. And then we've got Jones Find, which is about 1.5 kilometres from the mill to the east. Not only is this thick and lowish grade, but thick and right next to the mill, so it could be mined economically. It also poses for us a way to reduce our capital through reducing the amount of tailing storage facilities we need to mine. So I've now got Ray back up on my screen, which is great. Thanks, Stu. Still working. Here's Fingals. So Fingals has grown in about 18 months from 88,000 ounces to 275,000 ounces. This thing is open in all directions. We've had some really cracking grades that we've released sort of in the last 4 months or so. 13 metres at 37, down in the near the base of this, still open and quite exciting. So we've got a rig here at the moment drilling, and we're pretty excited to try and drill this out. You can see there's a pit shell on that image, and that's where we're going to start, but we do think this could potentially grow a lot larger. On the left of this image is where they mined a pit in the 90s, 91, 92, Fingals Fortune, it was called. They chased this flat-lying structure just up the top here. They mined 37,000 ounces out of that at a good grade, and they sort of lost it. There was some fault offset and it pinched out, but we've now opened that up for 400 metres and still open it at depth. So it's quite exciting. We're testing for repeats, and there's a whole heap of gold up in these western shear zones, which would feed into the pit. So it's a nice area, and we have a lot of drilling happening in here at the moment. You can see a lot of targets. It's obviously quite a noisy image, but it goes to show it's sort of open in all directions outside of where we're intending our starter pit. Trojan, we picked up in November 2020 now. Low costs. It was less than $5 an ounce we paid for these ounces. It's a 1 kilometre long system, untested at depth. We've put a couple of diamond holes into this now that we're waiting for results from. We think it's open along strike. It's certainly open at depth. These big orogenic systems typically going to be a lot deeper than they are long. So this is 10 kilometres from the mill, and we'll do the work that'll feed into the plan out in year 4, 5, 6 or something. Cal East has consumed a lot of our time, obviously. We've pumped a lot of metres into this. Last year we drilled 93,000 metres. I think we've drilled over 200,000 metres now since we listed, and obviously we're increasing all the time. Last year was troublesome for getting assays back. We sort of cleared most of it away by the end of the year, but we're back up to a bit of a backlog at the moment. In terms of where we spend our drilled dollars, we've actually put some into grade control to try and de-risk that startup phase of our pits. Obviously, we've spent a bit of time now infilling resources so that we can get reserves published, and we've done a bit of work on discoveries. So we have kept growing the resources quite a lot, and we could focus more on doing that. We will in time. So in terms of what we're currently working on right now, we have rigs on site. We commenced this year with 2 rigs. We're drilling Fingals. We're drilling at Jones Find. We will continue to drill throughout the year, and we'll continue to add ounces in and around our existing resource bases. As I said, we're working on our feasibility study, so we'll publish that with reserves later this quarter. At the moment, we've got Western Power doing a study. I'm pretty sure everyone has realised that petrol prices, diesel prices are going up. That obviously impacts on companies that are relying on diesel power. So we're lucky, we're only 12 kilometres off grid, and it's only $150 per kilometre to put in a power line. So that study will be completed, and we'll look to get onto the grid and reduce costs long term. We're working on the final diagrams issued for construction. They should be finished in this 6-month period. And of course, we want that last TSF permit, and we'll continue to work on additional mining permits that we'll need in time. Second half of this year, financing dependent, of course, we'll be into construction and we'll be pouring gold next year. So that's Black Cat. Gold price is good. We want to take this into production and see that good gold price. 800 square kilometres of untested, under-tested ground, a really strong growing resource, currently 1.3 million ounces. So waiting on those last approvals, currently working on reserves, and a heap of news flow coming for potential investors to get hold of. Thank you very much.
Thank you, Gareth. Now, we're going to go back to Ray Shorrocks' presentation. You recall that Ray's presentation had a coronary, which at the time was fatal. However, we have managed to apply the paddles to it and resuscitated it. So we're going to bring you the last couple of minutes of Ray's presentation starting now.
Aeromagnetic surveys, auger geochemistry, and first pass drilling about to occur. There's a lot of news flow for us over the course of the next few months. So, what is it? What are the key takeaways here at Cygnus Gold? They're very exciting. There's a lot of potential in our discovery in the portfolio. Blue sky, world-class province. I'm very pleased to be there. We have commodity exposure. So we have nickel, copper, gold, silver, zinc, and PGEs. Again, multiple targets that leverages against any commodity cycles we may find. So that's a really important aspect of the strategy going forward here. And because of all of our potential that we have that I've just explained to you, we'll have strong news flow, ramping up with exploration, with results pending from several programs we're undertaking, and we'll do more in the coming months. And finally, but certainly not least, is the team with a track record of success. I have often said in many of our companies that an asset will just remain an asset unless it has the team to extract the value for shareholders. And I believe this very strong team, supported by some really good shareholders, will give strong shareholder returns over time. I thank you for your time today, and please come to the booth and talk to our team. Thank you very much.
Thank you, Ray. Thank you very much, Ray, and apologies for the interruption to that presentation earlier. New World Resources now, where Michael Haynes is Managing Director and CEO. He joins us now with the New World Resources story. Welcome, Michael.
Thank you, Jerry, and thank you very much to Vertical Events for the opportunity to present here today. I like reflecting on this slide where we title it The Antler Copper Deposit, which is one of the highest grade copper deposits in the world. We secured this asset 2 years ago, and it's been a very busy 2 years. We've been drilling non-stop for the past 2 years. There is historic production here, most recently in 1970. This photo shows us standing on top of the deposit looking south. It's a sparsely populated portion of northern Arizona. It's a fantastic jurisdiction to do business, a fantastic jurisdiction to be bringing a deposit back into production. And we are firmly focused on doing two things here: continuing to expand the resource base. We declared a maiden resource in November. One of Canaccord's analysts, Paul Howard, declared that resource in the top 30 in terms of grade on a copper equivalent basis for global deposits. That was out of a database of 830 deposits. So this rated in the top 30 in terms of grade. And furthermore, in a contained metal, on a contained metal basis, this deposit rated in the top 20. And that's out of the 830 deposits. And so we believe that we're just touching the tip of the iceberg at present, but equally, we are pushing this deposit back into production because of the grade, because of the jurisdiction, because of the potential here. Just corporately, just to touch on where we are ASX listed. We've got a market cap of about 110 million. And at the end of December, we had about $13.5 million cash at bank. We secured the rights to acquire 100% interest in the Antler project back in January 2020, so just on 2 years ago. At the time, we took a 4-year option to have the right to take 100% interest. After 18 months of exploration and additional project development work, then we had so much confidence in the project that we exercised that option early. So 6 months ago, or in October, we exercised the option, and New World now owns 100% interest in the Antler project. It's located up in northern Arizona. In terms of access, then we're about 2 hours from Las Vegas and about 3 hours from Phoenix. It is sparsely populated, located on privately owned land, which is going to be a real positive as we move this project through mine permitting. But equally, we are very close to well-established infrastructure. We're 20 kilometres from an interstate highway. We're 20 kilometres from transcontinental rail. We are about 500 metres from power. Power costs in Arizona are very cheap. In fact, recently I've been told they could be the order of 5.5 to 6 cents per kilowatt hour. So very cheap power and very skilled workforce here. We are about 50 kilometres from the town of Kingman. Kingman's got a population of 35,000 people, so a great resource upon which to draw. But equally, Arizona produces more than 70% of the US's copper. So mining in Arizona, and in particular copper mining in Arizona, is extremely well understood. Where we are, geologically, we have a Proterozoic aged VMS deposit, volcanogenic massive sulfide. There is copper, there is zinc, there is silver, there's gold, and there's lead in this deposit. These deposits up in northern Arizona are very well understood. There's a cluster of 30 or 40 of them. They are almost always very high grade. For example, the UVX extended deposit, back in the 1960s, they were mining ore there that was grading over 10% copper. And the biggest of these deposits up in northern Arizona, these VMS deposits, is the United Verde deposit itself, where historically more than 33 million tonnes of ore have been mined. And that was just under 5%. So potentially very large and invariably very high grade deposits. What attracted us to this project was that not so much that there was historic production, and there was 70,000 tonnes of historic production, but the historic production was very high grade, running almost 3% copper, over 6% zinc. And more importantly, there had been a significant but very limited amount of exploration that had been done subsequent to the most recent phase of production, which was 1970. So the deposit was mined between 1916 and 1970, most recently in 1970, where 32,000 tonnes of ore were mined from about 150 metres below surface. But the mine then closed down because the copper price is 45 cents a pound. And to put that in perspective today, it's about $4.55 a pound. So drastically different price environment. But the mine closed down, but further exploration was undertaken. And over the next 5 years, a series of holes were drilled both from underground, so drilling from that 150 metre level, drilling the down dip extents of the deposit underneath the historic workings, and the deposit dips at about 60 degrees to the northwest. So a panel of reserves of around about 300 to 400,000 tonnes of high grade ore were drilled out with underground drilling. And that ore remains there unmined, and we'll look at that in a long section shortly. But more significantly, 4 years later, 9 holes were drilled from surface. And it was a fantastic campaign of exploration drilling. All credit should go to the geologists behind it there, because they drilled to a maximum depth of 550 metres over more than 500 metres of strike to test for extensions of this deposit. It was very broad-spaced drilling, but 8 of those 9 broad-spaced holes intersected high-grade mineralisation. And that's what really enticed us to this project. That was the last phase of work that had been done, and we saw the exploration potential of this. So just to look at the historic work in long section. So we've flipped around and looking side on the deposit. In pink shows the historic stopes. So the upper levels within 100 metres of surface was stoping through to 1945. The deepest pink stope there was very small. Just in here, that was 32,000 metric tonnes of ore that was mined in 1970. And in grey is a panel of high-grade reserves that were drilled. And then in blue, we see an envelope that measures 550 vertical and 500 metres along strike, where 8 of 9 holes intersected high-grade mineralisation. Typically, those holes were spaced 150 to 250 metres apart. So a lot can happen between those sort of spacings. So we took this data, and as soon as we'd exercised or taken control of the project in March 2020, we started drilling. We started drilling underneath the historic workings because we believed that there was potentially thicker, higher grade mineralisation underneath the historic workings. We weren't looking to replicate what was done previously. We were looking to add to the resource base. So we were stepping out 60 to 80 metres, which is quite a significant distance, but equally, statistically, we have consistently continued to intersect high-grade mineralisation. So just to reflect on some of the exploration success that we've had over the last 18 months, I just want to step you through some of the results that we've returned. So initially, one of our early holes, Ant 14, which was drilled about 100 metres underneath the historic reserves, those grey reserves that were drilled out in 1970. That hole intersected 17.5 metres at 4.6% copper equivalent. We stepped deeper, intersected 30 metres at 3.6% copper equivalent. Went deeper again, this time 60 to 80 metres deeper, 23 metres at 6.7% copper equivalent. Deeper again, 20 metres at 4.6% copper equivalent. And stepping down even deeper again, 25 metres at 5.2% copper equivalent. Extremely predictable mineralisation, extremely high grade, and extremely mineable thicknesses. At the same time that we were drilling underneath the historic workings, we were also very interested in the along strike potential of the deposit. So before we started drilling, we undertook several geophysical surveys. The first of which was drone magnetics. And the drone magnetics showed that there was a perfectly coincident magnetic anomaly that coincides with the historic workings. But very significantly, that magnetic anomaly extends for over 1 kilometre. So this was reaffirmation that there is definitely size potential at this deposit. It appeared to us that the deposit may not only extend to over 550 metres depth, but there may be additional portions of mineralisation over that kilometre of strike that coincides with the deposit and the magnetic anomalism. But to go and test the magnetic anomalism on a systematic basis would entail a lot of drilling and a lot of time. So we undertook a further geophysical survey, IP. And the IP survey led us to delineate about a 500 metre long, very strong anomaly immediately to the south of the historic workings. Within a week of having that IP data, we commenced drill testing that. And the first hole that we drilled into that IP anomaly that is pictured here on the long section was hole Ant 26. So that was the 26th hole that we drilled on the project. And that hole intersected 22 metres at 2.2% copper equivalent. So we then stepped down dip from there, drilling further down dip. This time was about 100 metres down dip, slightly further to the north. And here we intersected 6 metres of mineralisation running 7.2 copper equivalent and a further 6.7 metres running almost 9% copper equivalent. And these two intervals were separated by 8 metres of barren material. Extremely promising. So we went back up dip, drilled up dip, and here we returned 11 metres at 6.5% copper equivalent. And then we continued to drill deeper, 17 at 5.5, 16 at 3.5, and one of the deepest holes that we've drilled to date, Ant 69, a combined thickness of over 10 metres, and this mineralisation is averaging 6% copper equivalent or thereabouts. So this drilling continues, but at this point, we had undertaken some preliminary mining studies, and we had a feel that with a single decline for a relatively low capex, we could potentially be mining this deposit at a rate of around about 1 million tonnes per annum. So we wanted to stop and assess where we stood. So we calculated a maiden resource in November this year. And that maiden resource was 7.7 million tonnes at 3.9% copper equivalent. About 60% of that value is in the copper and about 30% of the value is in the zinc. And I do qualify that our copper equivalent calculations are taking metallurgical recoveries into consideration. So if we take 100% of the metals, 100% of the copper, 100% of the zinc, 100% of the lead, then this resource would report as 7.7 million tonnes at 4.6% copper equivalent. Doesn't matter which way we cut it, it's extremely high grade. Indeed, if we then apply a 2% copper equivalent cutoff to this resource, then there's still 6.7 million tonnes at 4.3% copper equivalent. In terms of confidence level, 74% of that resource is in indicated category. That's how predictable this deposit is. So what's the implications of that resource? Well, the implications are we've initiated mining studies evaluating a standalone processing facility to develop at a rate of around about 1 million tonnes per annum, because we see that we're probably approaching a critical mass to bring the mine back into production. And the high grades mean that regardless of the prevailing metal prices, we are likely to have a sustainable mining operation. But equally, if Goldman Sachs is correct, as they're forecasting, $14,000 a tonne copper in 2024, $15,000 a tonne copper in 2025, if we can be in production and capitalising on this, then we are going to be having an extremely high margin mining operation. And that's where we're heading. But equally, we see that there's a lot of value to be realised by making this resource bigger and bigger. The mineralisation is completely open at depth and it's completely open to the south. It's purely constrained by lack of drilling. So we continue to drill. We've got 3 rigs continuing to drill on site. Our immediate target is to define a 10 to 12 million tonne resource, but quite possibly the mineralisation here may be much, much bigger. To date, we've extended the mineralisation down to 600 metres below surface. These deposits can go 2 kilometres below surface. Kidd Creek, Rosebery are VMS deposits that go almost 2 kilometres below surface. So these deposits can have extensive depth potential and there's considerable strike potential. Indeed, since declaring that resource, we have continued to drill deeper and deeper and we continue to return exceptional results. So going back to main shoot, most recent holes that we've announced, in the deepest drilling that we've done, that the data has not been captured in the resource, 18 metres at almost 5% copper equivalent. Deeper again, 19 metres at 3% copper equivalent. And indeed, the deepest hole that we've reported from the project to date intersected a combined thickness of 43.5 metres of mineralisation. The deepest hole in the project has intersected the thickest zone of mineralisation that we have ever intersected on the project. That's extremely encouraging for finding more and more mineralisation as we go deeper and deeper. So to date, we've extended this resource down 700 metres from surface. It's consistent, it's thick, it's high grade, and it continues at depth, and we continue to drill. Equally, along strike, if we look at a slightly different representation of the data, if we look at a grade thickness long section, we are extremely confident we've defined 2 shoots, main shoot on the left-hand side, south shoot in the middle, and we think that as we're drilling deeper and deeper at the southern end of the deposit, so on the right-hand side of this slide, we think that mineralisation is getting thicker and thicker, and indeed the grade is persisting. So the deepest hole that we've drilled at the southern end is intersected 10.5 metres at 2.3% copper equivalent, and we see that there is considerable scope to continue to expand the resource at the southern end. So from here, what is the intention? The intention is to lodge permits for mining in the next 3 to 4 months and concurrently continue to drill the resource to make it bigger and bigger. While we're going through the mine permitting phase, which will be an 18 to 24 month process, we will complete feasibility studies and financing and be ready for construction in 2024 so we can capitalise on the forecast high copper prices. If at the same time we continue to expand the resource, we can look at either a staged upgrade of the processing facility and mining operation, and or conceivably use cash flow from the initial operation to expand the mining operation. I'd be very pleased to talk to anyone about our asset later on at our booth. Thank you very much.
Kin Mining has 1.2 million ounce of gold in defined resources across its 450 square kilometre package of tenements in the middle of WA's prolific northeastern goldfields, surrounded by more than 10 million tonnes per annum of existing processing capacity. Kin Mining's exploration manager is Glenn Grayson, and he joins us with an update on recent exploration successes and future plans. Welcome, Glenn.
Thank you very much. So here to tell you a bit about the Kin story. So delivering new discoveries in the Leonora district. So investment snapshot. Currently we're a WA-based explorer located in Leonora, a really strong shareholder base. One of those major shareholders is a nearby producer in St Barbara. We've currently got a 1.28 million ounce resource. We're growing that steadily. We have an aggressive exploration plan going forward that's delivering new discoveries consistently, and we're really growing our MRE. We've recently got some development optionality. Later last year, we got mine approval for mining part of the Cardinia or Lewis project, and we're currently waiting for approvals for our Mertondale resources up to the north. This will give us some optionality in how we take the project forward. As you said, there's almost 10 million tonne a year in processing capacity within 75 kilometres of our operation. We're well funded. As of the start of this year, we have $7.3 million in the bank. And I better start progressing the slides for you so you can see what I'm talking about. $7.3 million in the bank. So just a snapshot of our register there. We've got St Barbara on the books, a nearby producer with 18%. Delphi, a high net worth German individual with 29%. Other high net worths with 27%, and the remainder taken up by retail investors and our directors. And as I said, as of 31 December, we had $7.3 million in the bank. So the strategic footprint that we have, as I said, centred 30 kilometres to the east of Leonora. Inside the centre of those concentric rings there is our Cardinia project. Currently 650,000 ounces in resource at Cardinia. 20 kilometres to the north of that, we have just shy of 500,000 ounces in resource at Mertondale, and a little bit closer to Leonora at our A-size project, just short of nearly 180,000 ounces. Predominantly oxide ore located in those three centres. We also have regional projects to the north of Leonora. We have Mount Fouracre and Iron King. Out to the east of Cardinia there, we have three projects, Randwick, Mount Flora and Murrin, and I'll touch on what we've been doing with them a little bit later. South of Leonora, we have the Desdemona project. It's a large block of tenure there, south of the Gwalia mine. The majority of that ground is in two joint ventures, one with Sensor and one with Genesis. Both of those are a bit past halfway through their earning period. Just recently, we've added to our ground holding to explore through a joint venture with Golden Mile Resources. So we've added their 120 square kilometres of their Leonora project to use to explore and use our local knowledge. As I said, we've been progressing with an aggressive exploration strategy. We've had some recent success and discoveries with Cardinia Hill and adding to Rangoon, and some early stage success in discoveries in Cardinia at things like Pegasus and Mount Flora. We started our phase 5 drilling program last year. And as you've probably heard several times over the last couple of days, we're waiting on assays to continue that program. We've got an experienced team, a really good blend of exploration, geology, mining, operations and finance. And we use the best that Perth has to offer with the consultancies as well, using Cube, Como Engineering are helping with the processing side. Model Earth and John Standing are helping us tremendously, and Southern Geoscience as well. So what's the opportunity? So we have a large holding in a really underexplored greenstone belt at Cardinia. It's a great address to the Leonora Laverton terrain, host to several multi-million ounce ore bodies. And we've got the dominant land holding in a really underexplored sequence here, the Maneri. A feature of the Maneri is there's really limited deeper drilling, mainly targeted oxide drilling at historic workings, and really not taking geology into account. So potential is huge. We've taken a strategic pipeline approach with developing targets at a lower level and developing them through to advance them, as well as extending our known resources through the upper level pipeline. And we've been doing this just through doing the basics really well, so getting a good quality base data and doing some tremendous targeting. A feature of this map is the lower left-hand corner there. You'll see the Keith Kilkenny Shear. That's a terrain bounding structure that goes for hundreds of kilometres. 120 kilometres to the south of this map is Northern Star Resources Carosue Dam operations. And the geology model that those guys are currently mining to is very similar to what we are seeing at Cardinia. So at Cardinia, current resource, 655,000 ounces at a grade of 1.2. We've been drilling steadily over the last 3 years, developing our understanding of the sequence. We've had some success with Cardinia Hill, developing 100,000 ounces there pretty quickly, and other success lower pipeline with things like Pegasus, Eagle, Crow, and developing Rangoon as well. So let's talk about those a bit later. But we've been strategically building these with our pipeline approach and understanding the geology. So our phase 5 program is targeting the whole of the Cardinia belt there, both the eastern and the western side. And we plan to get going again once we get these assays back. One of the data sets that's really been helping us with our targeting is the gravity survey. So we did a really detailed close space station gravity survey with Richard Haynes helped us there with Hayes gravity. And what this image is showing you is the blue shaded areas are the less dense, lighter rocks. So generally felsic volcanics, porphyries and intrusives, and sometimes intense alteration. And the white and red shaded areas are showing the felsic, or the mafic rocks, sorry, the more dense rocks. And what's highlighted with the gold grades that you can see here is that the gold mineralisation really is associated with the edges of the gravity features. Another point to make from this map is that when we do get onto the good, strong mineralisation, and we were encouraged to drill them deeper, that the grades do improve and are consistent at depth. Some of the grades here, 15.8 metres at 3.8 at Helens, that's from 266 metres downhole, so that's more than 200 metres below surface. We've got the Rangoon's got 3 at 21 and 3 at 8, both of these below our current MRE. Cardinia Hill 21 at 6.6, 180 metres downhole again, and well below our current MRE. The point I like to make is that our resources are optimised, so they're not taking to the centre of the earth. They are constrained within an optimised pit. So this is a long section of Cardinia Hill. The brown line you can see there is the optimised pit that the engineers have defined with our parameters that we use. We've got 3 north plunging chutes and a 1.1 kilometre long structure there. And the highlight is that the drilling or at depth has the mineralisation continuing with the deepest there, 3.4 at nearly 10 grams from 252 metres downhole. So the grades do extend at depth, and the potential for future mining underground exists at Cardinia when we do test the depth. This is a little bit further out, and this is showing the entirety of the gravity survey. This is a 10-kilometre north-south by a 6-kilometre east-west map showing Cardinia. The red line down the middle is highlighting an ultramafic unit that we arbitrarily use to define the east and the west corridors of Cardinia. And again, you can see by the drilling there, the grades are standing out and highlighting the gravity, the edge of gravity features. More so on the western side, you can see an orientation there of the gravity lows. You see it, this is Pegasus down here. You can see the orientation there of these is a little bit discordant to the stratigraphy across Cardinia. This northwest southeast strike dips, the structures dip to the northeast or to the east. And this is a really strong control of mineralisation across the Canalpi terrain. So the Leonora-Leven belt is part of the Canalpi, and a lot of the larger ore bodies, the controls of mineralisation are around this orientation. So things like Wallaby and Jupiter in the cyanites, but also Granny Smith, Westralia, Red October all have this shallow northeast dipping orientation that controls the mineralisation. So zooming in a little bit to Pegasus. So this is literally a discovery from the last few months' work. We had a really strong auger anomaly across this, which we weren't perhaps contouring in the correct direction or correct orientation. The gravity survey certainly lined it up for us. We drill tested it across the gravity low you can see there, and we've developed a kilometre strike of really strong mineralisation. So we've got intersections 4 at 10, 8 at 3, 10 at 3, as well as plenty of historic work, drilling and some historic workings associated with this. The gravity low is a very intense gravity low, but what the drilling has told us is that it's a basalt, so it's a mafic rock, so it shouldn't be a gravity low, but it is. And there's a structure that's caused some intense alteration to cause the gravity low. So expectation is it's a Bruno style lode. Further to the north, Bruno lodes generally add 80 to 100,000 ounces to the Bruno Lewis resource. Stepping a little bit further out, so this is Mount Flora. This is one of our projects that's 20 kilometres to the east of Cardinia, and this is one of the projects that really has benefited from the pipeline approach, where we develop projects at every stage in the pipeline. So this is an early stage project, so it still receives as much attention as the upper pipeline projects, and creating some really good quality base data has helped us identify 3 anomalies early on with auger, followed up with some air core drilling that really come up with some stunning results, 22 metres at 9 grams in an air core hole. We wanted to understand what we're dealing with geologically, so we did a diamond hole beneath this section, come up with two good hits of 5.3 metres at 6.5 grams, 8 metres at 2.6. And what the pictures of the core are showing is there's a really strong association with scheelite quartz veining and grade, and that's in a biotite silica altered basalt. Sometimes a couple of foliations across that we yet to work out, and associated pyrite. So since then we've drilled 25 RC holes. We've got the results for the first 8 of those back, 18 metres at 1.6 and 22 at 0.9. They're above the diamond hole. So we're seeing 2 zones of really strong mineralisation, and I think the ingredients are there for quite a large system. One of the things to note is the previous exploration done on this tenement was in 1990 with some RAB by Sons of Gwalia, so literally not touched for 30 years. And that's a theme for a lot of our more regional projects. Murrin's in the same boat as is Randwick. So we're progressing them as well. So the development optionality. So we have currently 1.28 million ounces in resource. We certainly have plans to increase that to 1.5 as quickly as possible. We have development optionality now with part of the Lewis open pit mine plan approved. Currently waiting for Mertondale approval to come through, and it should be any week now. So that gives us optionality in hoping to monetize some of our assets. there is nearly 9 million tonne in processing capacity within 75 kilometres of our projects. So the options are there for an ore treatment agreement, ore purchase, profit share, some kind of agreement to monetise the asset. But if we do get onto a major discovery, the potential of a standalone development is still there. We have some of the mill components already on site. So the summary, key takeaways. We're an advanced explorer, nearly 1.3 million ounces and growing steadily. As I said, we've doubled Cardinia's resource in the last 2 years, and our plan is to get to Cardinia to close to 1 million ounces as quickly as possible. We're progressing our targets. We're doing the first drilling into our projects in sometimes decades, and our systematic explorations is really paying dividends with our new targets. And that with our methodic base data collection, doing that properly, we're really we have a full pipeline of projects to really test. We have an approved mine plan at Cardinia. That gives us optionality and gives us a way of monetising some of our assets. But our focus really is on making a major discovery in the Leonora area and really unlocking the belt scale potential that we really believe is in the Mineary sequence. And finally, we have tremendous support from both our board and our shareholders. So the plan is to continue the aggressive exploration. Thank you.
Blackstone Minerals is a WA-based mining company exploring Southeast Asia's premier nickel sulfide district. Managing Director Scott Williamson joins us now with the Blackstone story. Oh, there he is.
Thanks, Jerry. Thanks for Vertical Events for the opportunity to present again at Explorers. Not sure if the mining engineers are supposed to talk at Explorers, but I haven't been kicked off yet, so we'll see how we go. Won't talk too much about the rocks here. We've got what is a really exciting opportunity in northern Vietnam to restart the previously operating Ban Phuc nickel mine, and we're going to turn it into a downstream business to convert nickel concentrate into the first stage of the lithium-ion battery. And we're going to deliver a mine-to-consumer product for our downstream partners. So you can see here, it's a vertically integrated business model. We can take the nickel in the ground, convert it into that first stage of the battery. With our partners, we can then convert that into a cathode, which is the dominant part of that battery, the lithium-ion battery. It has high nickel in the ratio of NCM 811. So nickel, cobalt, manganese 811 is the product we will be producing from our downstream business. We have a large nickel sulfide resource that we'll be pulling from. So we have a nickel sulfide district. We have 485,000 tonnes of nickel already defined and continuing to explore and looking to expand on that 485,000 tonnes. As you can see there, we're looking to produce 80,000 tonnes per annum of NCM 811, and that has in the order of 40,000 tonnes per annum of nickel. So this is a globally significant downstream nickel business, and it's really based on this partnership model. So I've done many trips to South Korea and to Vietnam as well. So our model is around finding the partners with the balance sheets to fund this and de-risk this for us, and then working with those partners to deliver into the demand that's coming for the lithium-ion battery and the electric vehicle. So you can see here we have the upstream business unit. We own the Ban Phuc nickel mine 90%. We have a local partner, the Cosima, have been with this asset for over 20 years. This is an asset that has been in the hands of Westerners for over 20 years, but with that local partner there being very important part of that, that local team. We've also made some initial investments. We're looking to bring in third-party feedstock from around the world, particularly from areas like Australia and Canada, And so we've made some investments into up and coming nickel miners. And so we've got a real strategy around bringing in third-party feed from other jurisdictions, using those partnerships that we've built in South Korea and Vietnam, upgrading it into that NCM 811 product. And you can see there, we can produce enough nickel for over 500,000 up towards 750,000 electric vehicles. So it's going to be a large processing facility in Vietnam, and those electric vehicle companies that we're talking to are definitely excited about those sorts of numbers that we can push through this refinery. And it's no surprise that the LME nickel stocks are falling rapidly, and that's really been driven by this movement towards a high nickel cathode for the electric vehicle. You can see there the potential nickel demand coming from the cathode industry is 1.9 million tonnes per annum. And that's almost the entire supply of the existing class 1 nickel again. So we need to find another 1.9 million tonnes per annum. So that's a big challenge as an industry, and we're doing our best to achieve as much as we can. We're going to sort of push towards 40, but hopefully a little bit more than 40,000 tonnes per annum, but there's a long way to get to 1.9 million tonnes per annum as an industry. So a bit of work to be done there, but I think it's important that we do focus on exploration to achieve this demand. Otherwise, there will be a movement away from nickel and into different chemistry mixes. And the real benefit of nickel is that it can be recycled, and that's why we think that nickel will continue to be the dominant chemistry mix, because we can use that nickel time and time again. And the recyclable nature of this means that we think that the nickel cathode will be the dominant chemistry mix over the lithium iron phosphate batteries. So you can see this is our nickel sulfide district. We have the Bandfook disseminated. That's a large open pit, 450,000 tonnes of nickel in the centre there. That's where the existing concentrator is. We have a number of these other small, high-grade, massive sulfides, the Ban Chang, King Snake, Ban Quaz, and other disseminated. So there's nickel everywhere. It's outcropping. Even I can find it. It's everywhere. It's sort of like going into Campbell 60 years ago. There's nickel everywhere, and we're hitting nickel on every drill hole. And we think that we can be mining here for the next 20 years. So we've got a good 10-year already in that 485,000 tonnes of nickel. We've got about 10-year mine life. With further exploration with success, there's no reason why we're not still mining here for the next 20 years. Oh, well, sorry, I thought we deleted this slide, but apparently I've been too busy, but my share price took a 20% dive yesterday, apparently because of this slide. So what it's saying here is that we were aiming for a mine producing NCM production in 2024. You can see there's a slight delay to mid-2025. So effectively a 6-month delay. And so we're 20% cheaper today. So much better for anyone that isn't a shareholder. You can get in at much better prices than we saw before this slide got put out. But you can see there, it's a process. This is a world-class downstream nickel refinery. They're not easy, and that's how long it takes. So we're very transparent about that. Until now, we hadn't started the bankable study, so we gave out some guidance around 2024 as our goal. Now our goal is mid-2025, so sorry about that. But that's the best we can do. And I'll tell you, my partners in Korea aren't happy with that, but that's the best we can do. So most of the feed will come from this large Bandfook. This is the main intrusion of the previously operating mine. So the mine that was previously operated mined a small high-grade vein that was associated with this large intrusion. This is very similar to your Mount Keith style, big bulk tonnage disseminated. You can see there on the cross-section, very low strip ratios and bulk open pit mining. You can see similar grades to Mount Keith on a nickel equivalent, 0.44, 0.43. So we've got
your copper, cobalt, platinum group metals as well, which kicks up your nickel equivalent grade. So you can see, yeah, this will be our base load feed, and then we'll top it up with some of these high grade underground opportunities. So these are massive sulfides, higher grade, smaller, narrow vein underground mines. We've got 3 there, Banchang East and West, and the King Snake. So these will bring in some high grade and just top up that the feed grade into the concentrator. We're working with the Vietnam government on this target called Chim Van. I've nicknamed it the Big Bertha. It's about 10 kilometres away from Ban Phuc. So you can see Ban Phuc is our flagship asset. It's 450,000 tonnes of nickel. The Chim Van target, that's a mag feature, 15 times the size of Ban Phuc. So pretty excited to be working in collaboration with the Vietnam government to hopefully put some holes into this over the coming months. So we're working on reconnaissance soils and geophysics. We're using our geophysics equipment. So we have our own EM and IP gear that we're sharing with the Vietnam government. And then we're working through a process of bringing that into our tenure. And yeah, we're hoping to find the mother lode over at Chim Van. So if it's anything like Ban Phuc, it'll probably be another big, large, disseminated, large tonnage opportunity. And that's really what we need to secure supply for our downstream business. And this is the reason why we looked at the disseminated ore bodies. Most peers would go chasing the massive sulfides, but they just don't give us the long mine life and the long tenure that is required to bring in these long-term partners in the downstream business. We're talking about groups that need a security of supply over a 10 to 20 year period. And that's why we like the large disseminated ore bodies. And we've also invested in other large scale opportunities similar to what we're seeing here. So just where we're located in Vietnam, just out to the west of Hanoi. So it's about 5.5 hour drive west of Hanoi. You can see that at that Tan Phu industrial cluster, that's near where we're looking to build the downstream business, which is halfway between the mine and the rail infrastructure. So you can see that the rail infrastructure goes down to the port city of Haiphong, which is where VinFast is located. VinFast is Vietnam's answer to Tesla. Do a bit of research on those guys. They are going to be a major player in the electric vehicle space. And it would not surprise me if we see VinFast cars driving around Australia in the coming years. They're looking at a $60 billion IPO on the NASDAQ. So these startups are getting much better valuations because they don't have the legacy issues associated with those old OEMs that are just literally being left behind by these startups. So VinFast is one of them, and they're getting some great traction and looking likely that we'll probably be a partner with them over time, and we'll be able to bring the nickel in the ground from our Son La province out near the mine site, all the way through to the electric vehicle in country. It's a great story for Vietnam, and it's a great story for VinFast. So this will be some of the cleanest and greenest nickel in the world because we have a hydroelectric power source. We're looking at net zero carbon from day one using electric mining equipment. And we believe this is a great story, not just for Vietnam, but also for the mining industry to be able to drive a product all the way through to that final electric vehicle within so close proximity, driving that net zero carbon outcome. And we're doing it through this technology. It's a pressure oxidation technology used all through the mining industry, particularly through the refractory gold space. It's a proven technology being used in the industry since the 1960s. The other technology is solvent extraction, which everyone is probably aware of, has also been used all through the base metals industry since the 1960s. So there's nothing novel about this flow sheet, and we've done that on purpose. Our partners in Korea, they don't want anything that hasn't been done before. So that's why we chose this flow sheet. And they'll also bring the expertise to convert it into those downstream products. So working very closely with those downstream partners to convert that all the way through to the NCM 811 precursor product. So just in summary on what that means is we can buy nickel concentrate from our mine. We can buy our nickel concentrate from third-party feed providers and And any nickel explorer that builds a mine in Australia, we'll be talking to them because we can buy nickel for in the order of 70 to 80%, convert it into the NCM 811 product. That trades at a 120, 140% payability or a 20 to 40% premium to the nickel metal price. So we're effectively doubling the value of the nickel by combining it with in the chemical ratio of NCM 811. By combining it with the cobalt and the manganese, it trades at a significant premium to nickel metal. And that's what's driving some very strong economics in our downstream business. You can see here that that premium has traded as high as 60% in the past. At today's prices, it's around 30% above the current nickel price. So if we use the base case, which is a 20% premium, we're seeing a $2 billion NPV on our downstream business, and that's in the US dollar terms. So you can see there, we're looking at around 43,000 tonnes per annum of nickel into that precursor product. Very strong return on investment, low capital for the downstream business of 491 million. These are numbers that are not scary to our partners in Korea. These are companies that we're talking to that are investing billions in the order of $10 billion each. And so they look at our capital and they say that's no problem. And so we're very focused on bringing those funding partners, de-risking this from a funding and technical perspective through our pilot plant phase and unlocking that $2 billion NPV. So currently trading at 0.1 times NPV for any analysts out there. So that means when we build this, that's a 10 bagger. It's pretty simple, 0.1 to going to 1 times. A big year ahead. Upstream PFS is due any day or any week. Pilot plant testing ongoing. We've got the pilot plant in ALS in Perth, and we're going to build a large-scale pilot plant in Vietnam. We're looking to invest $50 million into the pilot plant, and we'll work with our partners through that process. We'll finalise those partnerships over the next 6 months. We'll then start working with our third-party feed providers and final investment decision towards the end of the year. And then we're into that build phase and building it as quickly as we can so that we don't lose any more market cap. So thanks everybody.
Eagle Mountain Mining is on an exciting journey to become a significant producer of low-emission copper in the Tier 1 jurisdiction of Arizona. To tell us more, we're joined by Tim Mason, CEO of Eagle Mountain Mining. Welcome along, Tim.
No worries. Thanks very much, Jerry. Great presentation there, Scott. Very, very exciting. So Eagle Mountain Mining, we've got quite a significant copper project in Arizona. We've got two, actually. We're focusing on our Oracle Ridge, which is the focus of my presentation. We are working to build a critical mass of our resources to be able to put this into production. And particularly, we're laying the foundations for green copper production is going to be the focus. Important disclosures. So before I get into it, just some recent updates. As I said, we've got a significant resource. We've been building that. We've been drilling outside the resource with 3 drill rigs, and we've been getting great results because we need to build up our resource. Some of the results there that you can see, 22 metres at 2.8%, 12 metres at 1.8. We've also been doing a minor amount of upgrade work. Some of the other results have been quite surprising, 46 metres at 2.1% as well. So drilling's been going really, really well for us. Over 5,000 metres drilled in January alone with the 3 rigs. We've got working on a JORC resource update. That's due out in the coming weeks, so not too far away. That's going to include 55 holes. And hot off the press today, we've announced that we are recommissioning our existing underground mine to enable underground diamond drilling to commence. This is a step change and a no-brainer for our exploration strategy. And it's also going to enable various aspects of our studies to progress a lot faster. So for those of you who don't know us, Oracle Ridge, we've got a significant JORC resource, 12 million tonnes. That's existing. That's going to get upgraded. And it's located on the side of a hill, which gives us really good credentials to be a low emission mine. And I'll explain why in just a little bit. We've got very good infrastructure on site. We're 18 kilometres of development, which doesn't need dewatering. There's one drive, which has got some water in it. So more than 90% is doesn't need to be dewatered. So that's really good for our ability to get underground for this diamond drilling campaign. Arizona, tier 1 jurisdiction, as we've heard from previous presenters. We've been drilling since September. We started off with 1 rig. We've recently gone to 3 rigs, and now we're going to have 3 rigs, with one of those being underground. Highly regarded board. Charlie Bass originally set up the company. Lots of you know Charlie, very, very well known in the mining industry, supported with Rick Crabb and Roger Port on our board. We're very leveraged to the copper price, and I'll show you why, because we've got a lot more copper at varying cut-off grades. We're located near Tucson. Down there is the Oracle Ridge project, and we're in a part of Arizona. There's a big belt called the Laramide Arc, which is where you get these big major copper projects. So we're surrounded by the majors, and our project shares a lot of the same similarities as those big major mining projects to what we're seeing, although it's a tip of the iceberg in our view at Oracle Ridge. So, but what it does mean is you've got local smelters, you've got rail, you've got road, all the mining services that you need, and that's really, really important. This is an elevated view of our mine area. We've been spending most of our drilling's been up in this mine area up here. That's where we've got 3 rigs currently. We're waiting on some permits to drill Oryx. This is a really exciting target. And there's another area called Golden Eagle, which I'll talk about a bit later in the presentation. But they're all within, really the mining area, because down the bottom here is the tailings dam, not too far away. So in terms of reopening the mine to enable diamond drilling, these photos were taken in February last year. There was drilling undertaken by previous owners in 2014, but this is great ground conditions. So our ability to get in there is really good. There's a lot of infrastructure on site. There's transformers and fans. There's a lot of the electrical infrastructure, which is really going to help us get underground. Now, why is that going to be important? Well, the drill holes are about half as long. So remember, step back a little while. This is what Bellevue did. They called it the game changer. Well, it sure is. From a productivity and a cost perspective, drilling half the length holes is pretty important. So that enables us to faster upgrade of the mineral resource, and in particular, our indicated and measured categories as well. It allows us to start taking bulk samples for metallurgical test work and also geotech studies that we are planning to do. So we don't have to go and try and take it from quarter core and half core. We can go and do proper test work from decent sized samples. I talked about being a low emission mine. Now, we have quite a unique opportunity here. We have 2 portals which go in off the side of the hill, and then it ramps up from there. So what does that mean? That means we can start using battery or hybrid electric equipment for our mining operation. We're not trying to mine something from a depth where those sort of equipment doesn't quite work yet, because you haven't got the energy density to bring it up, but it'll work for this type of operation, we believe. Now, what does that mean? That means that you don't need as much ventilation requirements, which reduces your energy consumption. And as we've already heard, energy is quite cheap in Arizona, but that's not the point. Reduce how much energy we need, and then that's going to reduce our emissions. It also then means we can start looking at downhill conveyors and where to position the concentrator, again, to be energy efficient. Gravity's our friend. It has a lot of flow-on effects. ESG is part of our DNA. We were really proud to be interacting with our local community. This is Brian Paul, our Chief Geo, helping out the local fireys when they needed our site to be able to access some fires with helicopter support. And then there's a photo there of shortly thereafter, all saying thanks. So our JORC resource, which is due out very soon, it's based off 55 new holes. So 12 million tonnes at the moment. We really saw that potential to expand the resource. This JORC update is going to be really focusing on expanding at this stage, and then we can also then look to upgrade it over the coming months. And as you can see, a lot of the resources around the existing development, they took out most of the previous ore. They've mined about 1 million tonnes out of this when it was last mined in the mid-90s. Is around the existing development. So that's great from a restart perspective, because we've got a lot of the capital developments already in place. If you had to go and put in 18 kilometres of development, you're probably talking north of about $100 million these days to go and install that. So that's a great ability for us to be able to get back in quickly. let's wait and see what this JORC resource update is going to be. It's going to be the first one, and then we'll be looking to do another one. At the moment, we've got 56 holes pending results, which are in the laboratories. So there's plenty of news flow still to come through after that. I said there's a lot of leverage to higher copper prices. Well, this is why. We've done the last cut-off grade at 1% cut-off, which gives you 184,000 tonnes of copper. If you change that, as you can see here, there's a cut-off grade from 1 to 0.8, the amount of copper goes from 184 to 242,000 tonnes. So it's about 30% increase with that change in copper price. So this project has a lot of leverage to rising copper prices. When we did that last resource, the copper price was about $3 a pound, and it's currently at about $4.50. The opportunity when we first acquired the project was resource growth. There's a lot of areas which have been very sparsely drilled. These are areas which we've been initially focusing on, and the results we've got to date have certainly been delivering, certainly, I'd say, in excess of our expectations. They've been fantastic. We put out an exploration target about how big this could be, and we've got 12 million tonnes. We can see this going up to 30 to 40 million tonnes, so an extra 14 to 29 on top of what we've already got. Now, that was based off a geophysical anomaly, so expanding what we've currently got, expanded out to the extent of that geophysical anomaly, and we discounted that. But at the moment, outside the resource here, we're getting about 90% of our holes are hitting mineralisation. That's a great strike rate. So the guys, hats off to our geos for recognising this opportunity and now delivering on those results. So these are some of the results. I don't like talking numbers too much, but it's hard not to when they're quite good. So here we go, 22 metres at 2.8. So these are just some of the, I think last time, if anyone here last time, we had some even better ones too, but these are just some of the recent ones that have been coming out. Down the bottom there, so 28 metres at 1.6. We're getting some nice high grade zones up to 6% copper, 12 metres at 4% up there. You can read the rest of them, but it's been very consistent, and this just seems to be getting better and better at the Talon. Now, these are all outside that existing resource, and these results here will be included into the new resource. We've also seen some nice big thick zones. So down the bottom, 91 metres going at 1.4%. 91 metres. That's been really, really good. And that area down the bottom has been modelled to daylight out at an old mine called the Leatherwood mine. And look, it's been great, and you can even see where it daylights out. So it makes it easier for the geos. I don't say that actually, because I'm not a geo, but you can see where it outcrops. So that's really nice. So we've done a moderate amount of infill drilling too in the existing resource. Now, what's nice is our resource is a series of stacked lodes. So when you're getting into mining, that's great because you can open up multiple mining fronts. And what we've seen is there's a lot of areas which had never been assayed in between the main identified lodes. So here we are, and we've gone to see this 110 metres at bit over 1%, 110, or they're 1.1% copper as well. So look, this is another reason why we said we've got to get underground and start drilling this because there's a lot of great opportunity and there's a lot of upside that we're seeing. As you can see in the middle there, it's a bit hard to see, 18 metres at 3 point, there you go, 18 metres at 3%. Compared to existing holes around it was certainly much better. So this is going to be a focus. We've got to upgrade some of this resource. So this was last mined in the mid-90s. The metallurgical recoveries from the reports at the time, they got around 90, up to about 95% recoveries in copper. It's quite a simple flow sheet, crush, grind, float, filter, coarse, grind, so not ultra-fine grinding or anything like that. They produced a bulk copper, silver, gold concentrate with no deleterious elements, quite a saleable product, and quite a conventional flow sheet. Silver and gold got recoveries just above 80% too. So from that side, but we need to get underground. We're discovering these new areas too. So we've got to do the met test work on some of these new areas which we're finding. That processing plant has now gone. It had a throughput of about 250 to 300,000 tonne a year, but we can see that opportunity to be mining at a much higher rate, which is going to give us that, reduce our unit costs. So when we saw this project, we saw that it had a lot of similarities to big other projects in Arizona. So we've started looking around around us to try and start piecing together, where's the feeder system for this? And, a lot of other projects have had quite big discoveries around them. So whilst we've been drilling out the main zones, we've also been looking further afield. So two of the areas, Oryx, up here, we've seen some outcropping mineralisation, and there's another area there, Golden Eagle, where we've put in some initial drilling, and we've had some very, very encouraging results. So this is some outcropping mineralisation at Oryx, so you get some good comfort that there should be more mineralisation there. Now, I'll tell you a quick little story. I was at a copper conference just before Christmas, and there was a bunch of copper people talking, and the chief geo from Sol Gold got up there and he was talking about how do you find big projects, and he wasn't really talking about Sol Gold in particular. It was a bit of an educational thing. And he said, look, if you're coming across and you start seeing lots of veining, you start counting your veining. And then he goes, well, then if you start to see lots of silica flooding in your veining, well, you start getting pretty interesting. But then if you start seeing galena and sphalerite and these other minerals, well, you're really starting to get pretty interesting. And you just got to keep on drilling in those zones. Well, we've drilled 13 holes at Golden Eagle, and it made my job really easy because I got up next and I said, well, it's funny you said that because look at all these holes that we've just been getting. So we're really excited by Golden Eagle. It's really starting to piece together the big story, and here are a couple of the photos that we've had from that area. So our strategy, build a critical mass. We're drilling from underground. We're drilling from surface. We're going to be drilling from underground. Commence our metallurgical studies, which is going to help us with the tailings dam design for our approvals, and also then into the mine design. Our development timetable, we've got a JORC resource coming out in a few weeks, and then we'll look to do another JORC resource later this year. At the same time, we are just going to keep on drilling. That's the plan. We've got to grow this, certainly while we're getting the results and moving into the approvals. Corporately, 230 million shares on issue, market cap of $140 million, tightly held. Charlie Bass, as entities, employees, management have about 33% of the company. So our value proposition, we've got a JORC resource, which is significant. It's growing. We're getting a lot of good drill results. About 90% of holes are hitting mineralisation, so it's going to grow. Our drilling program is accelerating to underground. Very good credentials to be a low emission mine, not offsetting it, but actually producing copper with less emissions. Rapid restart potential. We've got the underground mine. We're in a tier 1 jurisdiction surrounded by the majors. Come and see us. Fabio Vergara and Bree Ivory are here, who are all over our project. We'd love to talk to you. Please come and see us at our booth.
Thank you. One final presentation before morning tea, and it comes from the winner of the 2022 Craig Oliver Award to Grey Mining. The discovery of the Hemi gold deposit redefined how the industry thought about gold in the Pilbara. Allan Kneeshaw is here to provide an update on why De Grey think this is still just the beginning. Welcome, Allan.
Thank you. It's a real pleasure to be back here at RIU. I'm presenting today in the place of Andy Beckwith, who did a great job last year. And Andy, Phil and I were talking about what we'd like to communicate to the audience. And it really is an exploration and explorers conference. And what we wanted to focus on was what has been the results of exploration over the last year and where are we taking it from now. And so it's going to be a little bit retrospective, but also looking forward to what we think the future might hold. And also we want to sort of remind people where we are on the project pipeline study in terms of from the scoping study through the PFS to the DFS in the future. As we are going to be talking about exploration, there is a lot of forward-looking statements and some interpretations which we're going to be talking about. And so this is on the website. And I'd also like to acknowledge the traditional owners of the lands we work on. The De Grey portfolio covers a very large strike extent, and we cover quite a few families and traditional groups out there. So in particular, the Kariyarra, the Nalama, the Nyamal, and the Malana peoples. Now, we pay our respects to all the members of these communities, the elders past and present. We've been working quite closely with them, especially with the difficulties imposed by COVID, just ongoing programs for the native title clearance and actually approving our future work programs. It's been really important. I'd also like to acknowledge the team. Anyone who's been in the Pilbara in the summer, they know how hot and how difficult it can be, especially when the humidity comes up with the weather systems that come through and the cyclones. Now, it's been a huge journey from discovery from the early days when there was literally a handful of people to now where there's literally hundreds of people or 100 plus people on site at the times. There's challenging drilling conditions, the logistics and transport is all there. And it's not been possible without the efforts and commitment of the team, the contractors and service providers, and of course the support of the board from the get-go before we even found Hemi. So for me, this slide, the statement redefining the Pilbara is really special to me. I'm a child of the Pilbara. There's a fair bit of blue hematite that's in my bones from being born in the Pilbara through there. And in my heart, it was always for a long time been iron ore country. It just reflects where it came from. However, gold's always been there in the Pilbara. It was part of the discovery journey of gold in Australia, especially WA. And the Mallina project itself was the site of the first gold discovery outside of Halls Creek in Western Australia. So it's always been regarded, or had been regarded, as poor cousin to the Pilbara, to the goldfields in the Yilgarn. And it didn't really sit well in terms of why, but we really didn't understand it. However, the work that we'd done in the drilling in the project by Phil and Andy, especially in the early days at Taurana and the rest of the team, sort of highlighted the potential and the presence of these intrusions that we didn't really appreciate as well as we perhaps should have in the past. And Phil's talked to this previously in the new gen slides. And there was a lot of information out there in the public domain already about what the survey had done. So this discovery also reflects the work that had been invested in the public data sets as well. And it's just how we put that information together and how we use it to target the mineralisation that we discovered at Hemi. One of the big questions I always get asked, is actually two of them. The first one is, what are these intrusions? And you share these things as synucleoids that drove the exploration model and what they were. Followed very much by the second most often asked question at the time, and it was actually one of Andy's first questions, was Synuka what? And so we had to sort of take the board on a journey on discovery of what these intrusion style mineralisation settings could actually mean, and the size and the scale of them. And quite frankly, it's been breathtaking and how transformational it has been both for De Grey and for how we think of Pilbara and the gold story through there. And so it's a real privilege to be part of that and to share some of that story. Our journey, our timeline, last year, we hit quite a few key milestones as a company. We kicked off last year when Andy was talking to RIU with the announcement of the discovery of Dukon and Eagle deposits. That was followed currently when we're forming the regional exploration team to restart a lot of the regional exploration in the area. Again, doing a lot of work to try and close out the drill program to get into the first maiden resource. And then as work continued, we still were extending mineralisation at Dukon and Eagle, and exploration kept going, which then was followed by the delivery of the scoping study, which is a great result for the company and allowed us to raise a substantial amount of capital to keep the exploration going and to push on in the project. As part of that, there's a lot of work been going on in the background with the submission of the mining leases. So that was all last year. This year, what we're trying to achieve is a new mineral resource update during the first half of this year. We're rapidly approaching the closeout date on the drill data for that, followed by an update of the studies and the completion of the pre-feasibility study. And in the background, while that's going on, the ongoing work with the approvals and the permitting process to get the deposit into production. Ultimately, we'll be commencing the DFS and exploring our funding options as we increase our confidence in the resource and the reserves that we hope to demonstrate there at Hemi. So last year, the PFS was the PFS is building on our scoping study results. That 4.3 million ounce production scenario at Hemi over 10 years, building on both the Hemi resources and the existing regional resources, was a great outcome. So the pre-feasibility study that we hope to deliver or we plan to deliver in the second half of the year is targeting 500,000 ounces of production over a 12-year period, which is a great outcome. How we're going to do that is we have been doing a lot of work on the resource extensions at Hemi, Eagle, Falcon and Jukon in particular, but it's been work going on in all the deposits. We're trying to convert a lot of that from inferred to measured and indicated and push as much of those resources into the highest confidence level we can. And we'll be able to include them in the production profile and the production period. Part of the story is we actually hope to also deliver some increased resource grades at Jukon and Eagle, and that'll be coming through with the new resource update in the first half of this year. While that's all been going on, a lot of focus has been at the known deposits. We've actually been building up our target portfolio within the Hemi district itself, but in the wider greenfields terrains as well. And so once we get through March in the second quarter of this year, where the rigs will be moving on to other targets in the Hemi district and other areas, RC and aircore exploration has been going on continuing the greater Hemi area and the greater district. So 1 year ago, Andy presented here, and this is part of the retrospective. This is where we were. Exploration had been running at full pace. We'd drilled 285,000 metres of drilling since the discovery of Hemi. Brolga, Aquila and Crow and Falcon deposits were all growing very rapidly. Falcon had come out of the wings and delivered it and presented itself within 6 months. And Jukon and Eagle discoveries, we knew they were there in some of the targeting vectors that we're using, but we hadn't actually made the proper and true discovery yet. And Phil sort of had talked to some of the difficulties with the aircore drilling getting through that cover in his new Gen Gold presentations. So at that time, the maiden resource cut-off date was fast approaching and exploration was continuing. So we move forward in time to today, and you can see there's a substantial amount of work that's been gone into the ground at Jukon and Eagle, and that it's been very, very successful exploration. And there's also been a lot of work along the trend at Antwerp and at Scooby that is actually showing a lot of encouragement. However, that's been a big focus in the immediate Hemi area, growing the resources and improving our knowledge. So the district itself still has a lot of potential that we want to push along with, and it presents to De Grey and the shareholders a lot of opportunity outside of the immediate resource area. It's been a lot of geotechnical and metallurgical drilling as part of an ongoing exploration as well. So going back to 1 year ago today, when Andy was presenting, this was the lonely handful of sections that we had at Jukon and Eagle. We've removed all the aircore drilling from here, and the signs were there, the right rocks were there, the structural setting was a little bit different with a fault separating Jukon and Eagle, and it was a very encouraging stage. We moved forward a few months to the resource cut-off date, and you can see we've managed to increase the drilling density through here, but the sections were still very wide spaced, 160 to 80 metres apart, and showing a lot of promise, but all those resources at the time were in the inferred category that went part of the maiden resource announcement. So today, that's what Eagle and Jukon look like. So the team have invested a huge amount of effort putting this together. We're down on nominal 40-metre sections here at Jukon and Eagle. Eagle is now 1.2 kilometres in strike of mineralisation. We're seeing development and intersection of better grades to the west of Eagle in the western half. Jukon itself is also consolidated nicely, but we also are aware that it is potentially open and down plunge to the west. We also have a few blind targets nearby, heading west from Jukon and Eagle towards Antwerp. So the exploration that we've learned here at Jukon and Eagle, we've been able to apply to some of the other targets in the Hemi district. So just stepping through three sections from east to west towards Antwerp. These are the results that were released yesterday. Some very impressive intercepts coming through, 129 metres at 1.5 grams. Really opening up the mineralisation at depth. A lot of this drilling is actually extending the the previous resource shells, resource outlines below the pitch shells from the scoping study. Moving west to the next section, we're getting a series of intercepts that are showing a huge amount of encouragement with the folded contact with the ultramafic. And we have a lot of results to come in as we down dip and at depth underneath the Dugong. The last section here I'd like to show about Dugong is there's a shoulder down there at depth. We've got some excellent results on the upper zone of mineralisation at Dugong. But down the depth there, you can actually see the intrusion has a shoulder that is in part blind from the surface. But there are other vectors that we've been using to find areas of what might be hidden mineralisation or hidden intrusions against structures. And I'd like to talk about this a little bit along the slide. So stepping out from Eagle and Dugong and looking at the greater Hemi district between Antwerp and Scooby and the deposits Falcon, Brolga, Crow and Aquila. It's a really strong, really complex structural setting. We have multiple intrusion and placement corridors that we've identified, many with known mineralisation within them. Our geological knowledge is evolving and targeting, I think, is improving with that knowledge as we go forward. It's extremely prospective for setting for intrusion-hosted gold, but also for structurally hosted gold. So intrusion-hosted gold, what do I mean by this? This is some photograph of some great mineralisation from Brolga. Very strong albite alteration, disseminated sulfides with pyrite and arsenopyrite, cut through with arsenopyrite chlorite stringers. This rock is a great example, and it's some of the really good material that we're finding in the core of Brolga. There's a strong gold, arsenic and sulfur association with the mineralisation as well. However, when we move across into some of the areas where there's some structural overprints in the region, we're actually starting to see a lot of visible gold in quartz veining, which we don't really see in Brolga in the intrusion-hosted style of mineralisation. You can also see there's an early intrusion-style alteration in the top of the slide that's overprinted by sericite and chlorite and the quartz veining. So it's actually telling us we've got multiple generations of mineralisation. Like Andy likes to say, lightning strike twice at Dugong and Eagle. And it really does open up the exploration targeting criteria for our work going forward. So when we look back at the geology, you can see these red outlines. They are gold arsenic contours that have come from the drill data sets. From the outset, when we didn't have a lot of support, a lot of funding, we managed to convince Phil to separate some of that money away from drilling and actually invest it in multi-element chemistry. Phil asked me, well, what are we actually going to get from this? And at the time, we said, well, we'll get the usual pathfinder type elements. We'll get probably some vectors to the gold mineralisation that we're kind of aware of, but we don't really know what full benefit we're going to get out of it. The multi-element assays have been extremely powerful for our exploration and also for our mining studies. They've contributed to exploration targeting, identification and mapping out of metallurgical domains. The lithogeochemistry for mapping different types of intrusions and the stratigraphy has really been very powerful, as has been in the alteration. The regolith has also been better constrained from the multi-element chemistry and other assets like the TerraSpec data. So this data set that we weren't sure what it was going to provide has given us so much more information than we ever anticipated. And it's a tool that we're using to great effect as we go forward. So when we look at that chemistry, we've been able to identify other exploration vectors. Vector 1 is one that is proximal to mineralisation. You know what? Very close. We're in a good location in the intrusions. Vector 2 is more of a distal signature. These vectors actually can tell us when we're within 50 to 200 metres of the mineralised intrusion. And so they're a really, really good tool that we're able to use to help inform our exploration, especially testing for deep or blind targets. When we add the gravity data to this, you can see a string of intrusions that are along the Dugong to Scooby structural corridor, in and around the known intrusions at Crow and Brolga. And you can see the vector halos that are hanging off those intrusions. So when we strip back the geochem and other vectors, and we look at where the intrusions are, you can see that it's been a lot of work in the known minerals domains at Hemi, But you can see the upside that we have yet to really test here at Antwerp and Scooby, and a long strike on the structural trend from Duke on and Eagle. There's several targets in there, all begging for attention, and when we move away from the detailed drilling and resource drilling, we'll actually be moving the rigs through here and to test it deep. Hemi really is only just beginning the discovery story, and that's in the district itself. Where are we going? Now we have a mineral resource update due in the first half of this year and annually after that. The pre-feasibility study will be delivered in the second half of this year, which will move on to the definitive feasibility study, ultimately through to construction and production in 2025. Looking ahead on the wider Mallina project, the Hemi deposits are all open, particularly at depth. We've got numerous targets across the tenements, both intrusion and shear hosted, that the regional team are prioritising. We're benefiting from very low discovery costs, and we're looking forward to resource extensions in the next discovery in the next 12 months. Thank you.
Thank you very much. And afternoon tea is next, and we are back at 4:10.